Author, columnist, managing editor of LibertyNation.com, podcast host and conservative policy advocate.
We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
Hello and welcome to Liberty Nation Radio, heard coast to coast on the Radio America Network. I'm your host, Mark Angelides. On today's special edition, we're examining Biden's budget, whether the equity element of DEI is actually just communism in disguise, and the important cases that are coming up at the Supreme Court. Now remember, this show is proudly sponsored by LibertyNation.com, where you can access podcasts, breaking news, analysis, and a range of biting and brilliant shows to whet your appetite for freedom and your fondness for the great American Constitution. Hot on the heels of a State of the Union address that was more campaign speech, Joe Biden has released his latest budget proposal. Now, as with all things economics, we often get in our Liberty Nation economics affairs editor, Mr. Andrew Moran, to join us and give his professional economist opinion. Andrew, welcome back to the show. Good to have you on.
Well, I wouldn't say often because I haven't been on your show in months. Many weeks.
Well, clearly nothing of economic value has happened in the last several months, right? I mean, what is it? Inflation continues to rise. Money continues to be spent. The national debt continues to go through the roof, and people continue to confuse cutting the debt with cutting the deficit. What have I missed?
Well, you should read my work on LibertyNation.com, and you'll find out all the economic trends happening.
Absolutely right. Do please check out Swamponomics on LibertyNation.com. It's Andrew's vehicle show, and it's fantastic. It's very funny, very entertaining, and basically gives you a complete roundup of everything fun in the economics world, and there is fun there. Now, Andrew, I guess we have you in here today to talk President Biden's latest budget proposal. Give me the headline numbers.
Well, the headline numbers are astonishing. So the whole overall budget is $7.3 trillion. Now, Biden wants to spend $1 trillion more than what he did last year. But what I find the most fascinating about the budget is the cumulative effect. So you're going to have cumulatively $86 trillion in federal spending over the next 10 years. You're going to have $16 trillion in cumulative deficits over the next 10 years. And then on top of that, you're going to have $12.2 trillion worth of interest payments over 10 years. But Biden says he's going to reduce the deficit by $3 trillion over this span, which of course is just a drop in the bucket because you still have all this trillions of dollars in just red ink.
Yeah, it's one of those things. So I did some very basic accountancy at one point in my life, and I understood debits and credits. No real meaning except one goes on the left, one goes on the right, as I recall. So what's the over/under number here? What are we talking in terms of how much do we suspect this will add to the debt over its proposed period of time?
Oh, yeah. Well, so today the national debt stands at $34.5 trillion. By the 10-year period, by that window is over, it's going to be close to $53 trillion. That represents about a roughly 53% increase in this decade span.
Now, something tells me, Andrew, that you're not entirely convinced that it will only be $53 trillion. And I was also fairly skeptical about this because that assumes that everything that the government puts in place, all of these, let's quote Tom Jones here, these elusive dreams and schemes that they put in place actually work out precisely as the government plans. And that's not always the case, is it, Andrew?
Yeah, these are just rosy projections. So I wrote about this before with the Congressional Budget Office when it released its economic outlook for the next 10 years. It did not include things like a recession, a war, or perhaps a new public health crisis. So these all, whether it's the White House or a government agency, they're always on the glasses half full spectrum.
Yeah, and it also, I presume it also relies on interest rates being under control and inflation being within a measured, like up to 2%.
Yeah, I found that interesting because President Biden, he was at a campaign event recently, and he said that he knows that interest rates are going to come down soon. He just won't offer a timeline, just like the Federal Reserve will not offer a timeline. But if you look at if you look deep within the White House budget proposal, you see that they believe that one, inflation is going to remain above 2% over the next
Mm.
10 years, and that interest rates are going to remain above trend over the next 10 years. You see their 3 month Treasury bill, it's at above 3% over the next 10 years, and you see the benchmark 10 year, and it's also between 3 and 4% over the span. So I find that interesting because then they're assuming you have a high rate environment and still above the 2% target, above the Fed's 2% target rate.
So essentially, the White House predicts that people will continue to be paying more and more for goods for the next 10 years, assuming we stick to Joe Biden's budget plan.
Yes, absolutely, and of course, yeah.
But of
Well,
course, Joe Biden's made it a center point of his State of the Union speech to say, "Hey, these prices, they should be coming down now. This is corporations. They're robbing you. Why aren't they
okay,
coming down?" And of course, the fact is, even his White House is predicting well, inflation is going to continue to, because inflation's cumulative, right? It's not as
yes,
though
exactly.
it's, it's well, look, inflation's down this week, therefore you're paying less. No. It means you're paying, you're still paying more, just at a slightly slower rate of increase. So this whole greedflation thing that he's putting out, it seems like a bit of a long con to me, Andrew.
Yeah, well, there's many things to unpack in your spiel there. Because one, well, the greedflation.
You can call it a rant. You go ahead.
The greedflation thing, if you look at liberation.com, we debunk that myth because one thing you look at for greedflation is you look at producer prices, the stuff that businesses pay and then pass on to consumers. That has actually exceeded the consumer price index. So if these companies were price gouging consumers, they would be paying a lot lower in the PPI. Two, I think the most egregious thing of that State of the Union address was when he claimed that the U.S. had the lowest inflation rate in the world. And of course, that is nonsense because Japan has a lower rate, China has a lower rate, Canada has a lower rate, even the Eurozone has a lower inflation rate. So I thought that these people should be looking at the facts and preparing a huge speech that's viewed by millions of people, and you can't get the most basic fact correct. That's astounding to me.
But something else that I wanted to delve into on the budget here, Andrew, was that it seemed to be an attempt to please everybody. It was what I'd consider an equity budget. Now, I know we all have some issues with the word equity, and rightly so, let's be fair. But, it seemed like, oh, you're going to get the same things. You're going to get this. It was like, to me, it was like Oprah Winfrey's, and you get a car, and you get a car. But it was, and you get $1 trillion, and you get $1 trillion, and you get $1 trillion. It was, Andrew, your take. This is an equity budget, isn't it? It's a let's try and create equal outcomes budget.
Well, I think it's more of an equal suffering budget because these people, everyone gets goodies now, but the bill eventually has to come due because how are you going to pay for $16 trillion worth of deficits? Oh, that's right, the printing press monetizing the debt. Also, what I found remarkable about that budget is that he wants to end subsidies for big oil and big pharma, but he says nothing about ending subsidies for the whole green energy lobby. This was a nice giant handout for the whole renewable sector. So everyone's going to get child tax credit, everyone's going to get paid family leave, but these things cost money. And he may be paying for some of it, but then again, they're based on rosy expectations that this policy is going to raise this amount of revenue, which of course is nonsense because let's say he raises $500 billion over 10 years from a 25% wealth tax. That's $500 billion. That's still a drop in the bucket for the $16 trillion worth of deficits.
I want to talk at length about this wealth tax, let's call it what it is, this frankly communist seizure of potentials. But we're going to talk about that when we get back after this short break. Andrew Moran, listeners out there, thank you very much. Don't go anywhere. We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
And we're back with Liberty Nation's economics analyst and editor, Mr. Andrew Moran. Earlier in the show, we were talking Biden's equity budget, the something for everyone, and the, let's face it, the rose-tinted glasses with which the whole report's been produced. But now I really want to drill down into a couple of things that came up in that. And Andrew, in the break, you and I were talking very briefly about it's the Groundhog Day budget, isn't it? Because the the tax on unrealized gains, which I tell you what, this just blows my mind entirely. But it's back again after it was in the budget last year and the budget before. Andrew, I believe the cool kids say, give us the skinny on, or at least they did in 1970. The skinny on the tax on unrealized gains, the 25% wealth tax.
Yeah, so as you just summarized it perfectly. Yeah.
Well, thank you, Andrew Moran. Off you go. No, carry on.
But I think a big part of that is the expectation or the forecast that this is well the numbers have ranged over a bit over the last few months. Last year was 500 billion. This time it's around, I think they said $600 billion. But either way, this 5 or $600 billion over 10 years.
Yeah.
This is not going to raise $500 billion overnight. It's just astounding to me. But I think when people are concerned about this type of policy making its way into the tax code, it's not going to happen just based on the fact that you still have a House Republican majority. So just like last year, it didn't work. It didn't go through. There was too much obstacles. There was too much opposition to it. So I highly doubt, just like the wealth tax, many things within this budget are not going to go into law based on the amount of Republican opposition and perhaps moderate Democrats.
But it keeps coming back, which means that it's probably whoever's writing the budget, because Joe Biden did not sit down and write this budget. There's no way. It didn't happen. Anybody who says it did is probably an idiot. That they think that he sat down and thought, oh, I'm going to write this entire budget. There's however many pages it is with all these legal clauses, all these references to numbers. Joe Biden didn't do it. But whoever did seems to be part of the continuous government within Washington, D.C. And I don't want to say that's a bad thing because, although it may well be, but, there does need to be a certain continuity to things. Otherwise, nobody knows where the garage door keys are, right? But you've got these people, and they're probably the people who are doing the drafting, doing the writing. And there's also the people who are providing the ideas. Now, as long as there is a government that wants to increase the taxes, an unrealized gain tax, that's out of the box. Now, the genie is out of the bottle. And so people are going to want to keep pushing that, probably from one side of the aisle more than another. But let's talk about what that means. That means that if you buy a stock, for example, now, if that stock goes up, if you buy it for $10 and it goes up $10, you're going to be taxed on that $10 profit, even if you don't sell the stock, right?
Yes, absolutely. And then you risk, losing your money because you don't want to because you're going to pay taxes on that stock that appreciates in value, and you're going to lose money if the market crashes. So this is another consequence of that policy. But I think the other consequence of this policy is the ratchet effect, or you're going to have middling because so for example, Biden, he wants a 28% corporate tax rate, and then eventually, maybe that sets too high. Maybe he actually wanted 24%, but he thought that if I raise it 28%, I could eventually negotiate my way to 24%. And this is the problem in Washington when you have too much negotiation going on, as opposed to setting a foot and saying, look, 20%, that is too high. 24% is too high. You want to have, a competitive environment. And that's the problem with the White House forecasting when it comes to rosy projections. On the one hand, they're saying that we're going to have, continued 2.2% GDP growth over the next 10 years, but that's surmising that these policies are going to actually facilitate growth and spur corporate investment. Because you saw after Trump, when he passed his Tax Cut and Jobs Act, there was tremendous amount of corporate investing going on, whether it's workforce, expanding operations, whatever the case. So now a lot of companies, they're just going overseas, but then even that creates a problem too, because Treasury Secretary Janet Yellen, she created a global policy of having a global corporate minimum tax rate of 15%, because according to her logic, that you can't have a race to the bottom, and now governments are going to be starved for revenue, therefore they can't spend whatever they want because they don't have the money. And then of course you have the inflationary effect, but even that's not going to resolve the issue.
If you haven't listened to the first segment, Andrew accused me of going on a rant. Andrew's just had his own moment there. Let's get back to that. I mean, that's fascinating stuff. But I want to really dig down into this unrealized gains tax. So we agree that even if you don't sell the stock, you charge 25%. So that's money coming out that you'll have to find from somewhere else,
Yes.
right? Because you haven't sold the stock.
So perhaps you have to sell something else. You have to sell your
Yeah.
treasury securities.
Yeah.
Okay, sorry.
So then what happens the next year?
Well, actually, there was one proposal from a Democratic senator. I think it was Ron Wyden, where you can have it carried over into the new year. So therefore, you can have perhaps a tax deduction on your losses from the unrealized tax. But again, these are all just ideas. I'm sure, if Republicans do agree to it eventually, which perhaps they will not, they'll probably try to trim it down, maybe at 10%, maybe there has to be a cap, or maybe it only applies to millionaires or billionaires as opposed to everybody else.
We know how well that works out. This will only apply to people who earn this much.
Exactly.
It's going down and down.
Just like the income tax. The income tax was that way exactly. It started off from a very upper echelon, and then it traveled down to everybody else.
Now, with this, carrying on this theme, Andrew,
Yes.
Isn't this an anti-growth agenda? So, for example, I would be reluctant to purchase stocks, speculative stocks, certainly, if I knew that I was going to have to possibly sell off other assets to cover a tax bill on gains that I haven't made and am unlikely to make during this fiscal year or even the next fiscal year. I would be unlikely to put money into that kind of investment. Am I wrong?
Yeah, you're absolutely right. But at the same time, I mean, it's still a very speculative stock market if you want to dive into that area,
Sure.
Because financial conditions are loosening. You have money printing reaccelerating. You have expectations that the Federal Reserve is going to cut interest rates, so you still have that speculative environment. Eventually, investors adapt to whatever is put in front of them.
Yeah.
Of course, it just backfires eventually, whether it's a bear market or you have a recession or a depression. High interest rates, but whatever the case, when margin trading is too expensive.
That is absolutely right. But of course, an unrealized gains tax, that's not just for stock markets, is it? That's on all of your
Yes, yeah,
assets.
all of your assets. Yeah, that's the thing too. Last year,
that's homes, that's
exactly
property, investment properties, or even the home that you live in. I mean, is this right? That if you buy a house and then it goes up in value, and then you've got to pay a tax on that value?
Well, I'm not sure in the United States that they have a capital gains tax on home appreciation. I know in Canada you do not have capital gains tax.
Right.
You do have a flip tax, though, where you buy a rundown property, you flip it, renovate it, and sell it. Then that needs to be taxed by the federal government. But I'm not sure in the United States
that needs to be taxed. That's an interesting way of putting it, Andrew. That needs to be taxed. I beg to differ.
No, I'm up to on your side. I'm on the Milton Friedman school of thought, where you cut taxes as much as you can for anything you can.
Well, I mean, actually,
but the issue is that you have to complement your tax cuts with spending cuts too. You can't just. This is the problem I have with the Laffer curve. Yes, the Laffer curve shows that when you cut taxes, revenue goes up. That helps offset some of the losses. I'm putting that in air quotes there. Losses the government has, because the tax is just giving back the money to the people or to companies who wealth is confiscated. You're not going to pay for that, so you have to cut spending drastically and then complement it with tax cuts. That's you have to do it that way in this type of climate.
And just before we round out, Andrew, last thing, the inflation numbers came out last week. Good, bad, or indifferent?
So for the second straight month, it topped market expectations, came in at 3.2% year over year in February. On a month-to-month basis, it rose 0.4%. Core was also up. Overall, it was a bad inflation report because it topped expectations again. So you're going to have a threat of a reacceleration of inflationary pressures, just like I predicted back a year ago that you're going to relive the 1980s, 1990s when the CPI ebb and flowed.
It's one of the few occasions when you hear topped expectations, and that's a bad thing. Andrew Moran, thank you ever so much for joining us.
Thank you.
We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
And we're back here on Liberty Nation Radio for our special Talking Liberty segment with our Talking Liberty regular, Mr. Scott Cosenza, Esquire. I'm going to add that in just to provide some extra weight for the topic that we're discussing today. Scott, welcome back to the show.
That's why I got the initials, Mark, just for that extra weight.
Absolutely right. It's good to have letters after your name. Although, of course, if you're reading your name in print, there's usually letters before it and after it, and all over the page, sometimes in paragraphs. Scott, I read an article about racial disparities in the outcomes of the bar exam, which is the bar exam, I believe, and tell me if I'm wrong in this, is what you need to pass before you can appear in court as a lawyer.
Before you can sell your services as a
Right.
lawyer and appear in court. Most people, just for the record, never appear in court to represent clients.
Sure.
But you can't sell your services as a lawyer in any state unless you're a member of a bar or their bar.
So the news reporting that I was looking at was talking about how there's these massive racial disparities, and surprise, surprise, Scott, and I think you'll be somewhat stunned by this. So please do grip very tightly the sides of your chair. They blame the disparities on racism.
Well, they blame the disparity on racism within the test itself. That's the thing that's so funny. It's that the bar exam is somehow racist, which is preposterous, I think. And the reason why is because applicants, at least before the recent Supreme Court rulings that have said affirmative action in higher education is not constitutional, we had a situation where favored applicants of favored races, namely blacks and Hispanics and Native Americans, were given boosts, significant boosts, both in their high school grading and then with college admissions and college grading, and then with law school admissions and law school grading. So they've been artificially inflated at several levels before that bar exam. And then we find that the bar exam passage rates are lower for those people who were elevated above what their testing indicated. So if it would be almost like, think of how preposterous it would be, Mark, if we had a subset of, and let's just say white applicants, okay? And these white applicants were judged at a different standard for their high school years, and then at a lower standard, by the way, not just different, but lower. They were required to do less work and achieve, lower results on standardized tests. Wouldn't those people, if they were demanded less of at each stage of the game, then also have lower bar passage rates? But they would be white. Well, the same, it seems to be very clear to me, that this is just about lowered expectations and lower demands on a certain subset.
It really kind of blew my mind that the people doing the reporting on this were tying themselves in cognitive knots to not blame it on what was essentially affirmative action.
They say the exam is racist somehow.
Yes. So let's follow the logic on this, Scott.
I've taken the bar exam more times than I care to admit on this program. I did not pass the first time I took it. I have passed. And I can tell you that the bar exam depends on both a kind of cognitive understanding of how the rules fit together, and also an extremely high amount of rote memorization on topics that most people who are and most lawyers aren't even interested in. Meaning, people who are lawyers are often interested in some subset of the law. Like for me, I could have probably passed the constitutional law part of the bar exam when I was in high school. That's how interested I was in those topics. But when it comes to like real estate transactions, I mean, I probably could have only passed it on the day I actually passed it. In other words, to retain that knowledge before it left my skull. And so if you can't do both of those things to a fairly high level, you're going to fail the bar.
Well, that brings up a point that I do want to delve into. But first, I do want to get to the circular logic of racial grievances and the unending series of stupidity that arises from it. So affirmative action pushes people into a position where less is demanded of them. So maybe they don't have the people who benefit from affirmative action, not the people who could generally just get into these schools and these programs by themselves.
Well, it poisons those people too, Mark.
Yeah, of course it is, but that's on a different topic. Right. But it is absolutely right that it does poison it for them. That now that they've got to actually take a test that is outside of somebody saying, well, hey, this person has this particular racial characteristic. And so it puts them outside that. And now they've got to perform on that. And they're saying that the difference...
They pale by the people who are measured against the objective standard, or have been previously measured by the objective standard.
And so here's where the madness comes in, Scott. People are now looking at, well, look at this test. So it's clear there's a disparity. Therefore, the test must be racist. So therefore, we need to implement some new kind of system. Let's call it affirmative action bar exam, because that will solve the problem. When it didn't in the first place, did it? This whole thing was caused by somebody's idea to solve a problem.
Right.
And so now they're going to apply the same formula to fix the problems that the initial solution created. It's a never-ending stream,
Scott. Third
Scott.
pill to address the complications of the complications from the first illness that the first pill was prescribed for.
Yes.
That's exactly right. And, bar exams, here's another kind of odd fact about bar exams. I'm sure, I'm going to guess that you didn't know this. Most people don't. The bar exam passage rate is not, it's not like a certain number of correct answers on the bar exam or a certain score will yield a pass for the bar exam. That's not how it works. What happens is and this is a 50 state and more issue, meaning each state has its own bar and own bar examiners, and also like DC has its own. So there are more than 50, but each jurisdiction in the United States has its own. They actually get together after the test has been performed, and they decide how many of the test takers they wish to admit, and then they will scale the score. So let's say there were 100 questions, right? Mm. One year, they may say, okay, if you reach a score of 85, you have passed the bar exam. But if there are a lot more test takers in the following year, and a lot more of those test takers have achieved an 85, they will say, oh, we don't want quite so many lawyers here to compete with. So we'll actually raise it. It could be an 87 or an 89 that year. And so it's a moving bar, literally, as to how to pass the thing. It's kind of preposterous, but that's what it is. But racial animus, by the way, it has nothing to do with it. And I can tell you, as somebody who has failed the bar exam, that it was a horrible experience. And I can tell you that if I could have blamed that experience on something other than my own poor performance, I would have, with both hands. I would have grabbed that explanation that had something to do other than with my poor performance, right? And I would have seized it. And that's an opportunity that's offered to every minority who reads these reports and kind of believes that this, and it's a recipe for their own disaster. Because, for instance, taking my own case again, if that happened to me, and instead of tripling down, right, and getting all this tutoring software and just devoting my life to the passage of the test, which I did, I never would have. I would have always thought, oh, the system's rigged against me, and for factors that are outside myself, I couldn't make it happen.
It's funny that you mentioned tutoring software, because there was a piece in Bloomberg in 2021, and they talk about one of the reasons for the racial disparities because of money. And so people who are working, people who have to work, maybe have less time to study, people who can't afford specific softwares. And so they say, by and large, black people have less money in America than white people. Now, I will get to the pertinence of that statement, that therefore that is the racist element that is keeping black and Hispanic applicants from achieving success at the same rate.
Let me just clarify, if I may, what you're saying.
Yeah.
So that basically that the measure of success for the bar exam was the measure of preparation that was afforded the candidate, and that people who are wealthier are able to devote more resources to that preparation.
Yes. And now here's the real kick in the teeth about it. They said that the gaps pretty much disappear when anybody spends about 40 hours of study beforehand. Now, correct me if I'm wrong, Scott, but if you can't devote 40 hours to passing the exam that will determine your future, you spent all that time and treasure getting to this point, but you can't devote 40 hours to it. I mean, 40 hours a week. Maybe that seems like a lot to some people, but it's really not if this is the thing that's going to determine your entire future.
So I have a different perspective on this, Mark, because I happen to know that what happened was there's an arms race, both with all these kinds of testing. What happens is they institute a test for standardization purposes, and people then devote themselves not to learning a thing, but to performing well on the test. And so, for instance, the bar exam is a good example. You have all these testing services, right? It becomes very important to pass the bar. People want to do so in the most efficient way possible, so they hire these testing services. And so then what that does is it raises the passage rate. If we're right that racism doesn't have to do with this, we should see bar passage rates increase for minorities as the affirmative action allowances are cast aside. So if Black candidates are evaluated based on their performance rather than the color of their skin before they get to the bar exam in college and in law school, then their bar exam passage rates should be commensurate with those of people of other races.
So it's a problem that should go away with the repeal of the affirmative action that the Supreme Court oversaw very recently. Well, here's hoping, Scott. We'll be right back with Scott after this short break talking the Supreme Court. Don't go anywhere. We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
And we're back on Liberty Nation Radio. I'm Mark Angelides. We're joined once again for this next segment by Scott Cosenza, Liberty Nation's legal affairs editor. Now, Scott, returning our attention to the cases that do not involve Donald Trump, of which there are many and whose import is great. Scott, what's up in the near term for the Supreme Court?
Yeah, there was a full slate of cases before before the attempt to restrict
Before
American
Trump took over the world.
Right. Yeah, so there are three big ones next week. The first up is Murthy v. Missouri, which is about the Biden administration's attempt to either A, give guidance to social media outlets for which information they should publish, or to threaten and implicate and infringe upon Americans' First Amendment rights. And that's the contest. The Supreme Court granted an injunction basically against a lower court ruling that argued the Biden administration was infringing against Americans' First Amendment rights by communicating with social media and encouraging them to ban and restrict posts for vaccine skepticism, for instance, and other topics.
Let me just dig into that just for a second. So this is actually one of the occasions when it really is a First Amendment case, though, unlike the many that people say are First Amendment cases that really aren't, because this is a case of the government stepping in to try and limit speech rather than a private company
yes,
saying,
this is not
we
about,
don't
like,
want
Facebook
this or we don't want that.
Own saying, hey, we don't want vaccine skepticism posts on our platform. This is about Murthy is a Navy doctor in the Surgeon General's office. Anyway, this is about them going to a platform like a Facebook and saying, hey, this is the truth and this is not, and you should, restrict posts that don't quote unquote post the truth, for instance. So yes, to my mind, it is absolutely
genuine.
The question for the court will be whether or not there was a sufficient kind of hammer, right? Any government official can just say something that doesn't necessarily make it a First Amendment violation, but does the implication of, hey, or what, right? That's sort of the thing. And if there's an or what, or an implied or what, then I think the First Amendment is implicated, and that's what the fight's about.
I'm looking forward to that one playing out. Scott,
Yeah.
what else is up on the near-term docket?
The NRA versus Vulo case, which is a very close cousin to that, but instead involves the threat for financial regulation. So basically, financial regulators went to credit card companies and others and said, like, hey, you want to keep doing business with the NRA? That seems like bad business for you, buddy. Well, the implication there is, of course, if you depend on those regulators, to grease the skids of your operation, whether that's lending or any kind of financial transaction, which in this country is hyper regulated, you want those regulators on your side. And so the implication is that it's an imposition, an illegal imposition against the NRA's First Amendment rights and all of those of us Americans, really all Americans, if they're going to do that based on speech. In other words, if the regulators went to the banks because of the type of speech the NRA was engaging in and then wished for them to close the relationships down, close the NRA accounts down, the NRA is saying that's a violation of free speech. And the Biden administration is saying, no, that it's not. It's okay to do, presumably. If it was the NAACP's accounts that were threatened by a Republican administration, I suggest there would be demonstrations in the streets. But in this case, we'll see what happens.
You know, to my mind, and of course, my mind is not legally trained in any nation or state or province. But it seems to me, I have watched a lot of mafioso movies, and I do happen to own every book that Mario Puzo has ever written. And The Godfather is about the third best one, I should point out. But to me, it seems as though what you have here are financial regulators, and they're essentially acting as enforcement or protection collecting goons, saying, "Hey, you're loaning money to this guy. It'd be a shame if something happened to your credit bureau, your lending agency. It'd be a shame if we changed the regulations because you keep doing this." I mean, that's how it seems to me.
I can tell you, Mark, since the Clinton administration, the anti-gunners have felt comfortable with a full court press against guns throughout all tentacles of the government. And so under the Clinton administration, for instance, one of the Cuomos, who was the Secretary of Housing and Urban Development, for instance, advanced gun control in public housing. So it's like wherever they can possibly have any sort of like, sometimes you'll be driving down the road and you'll see like a beautiful flower growing out of kind of a patch of concrete. And you'll think, oh, anywhere they can, life blooms wherever there's the potential for the purchase of it. Well, the same thing is true with an attempt to seize gun rights from Americans for the anti-gunners. Wherever they can get the tiniest of a foothold, they'll try for it.
All right, and what else do we have at the Supreme Court, Scott? What rounds out your trifecta here?
A drug war case called Diaz versus United States. And the war on drugs is really responsible for a massive declination in individual rights of Americans from its inception through to today. And this continues that arc. In the case of Diaz versus United States, a woman who crossed the border in a car that was laden with drugs claimed during her trial that she was unaware of the fact that it was laden with drugs. And there's reason to believe that it wasn't, that it might have been a boyfriend and some cartel activity that she was unaware of. Well, during the course of the trial, the government wishes to put forth an expert, or did put forth an expert that said, basically, we know that people are for instance, we know that people are often murdered by those closest to them, whether it be a family member or a business associate that's close in. But if you are charged with murdering a person you're close with, they can't just say, well, we know that people are often murdered by those closest to them, so that's why Mark, you should find guilt against Mark, which is essentially the ask against Ms. Diaz. And I think that it's a case that's, like, for instance, if we can extrapolate, why would this might be otherwise important beyond the drug war? And I think it's important enough within the context of the drug war to watch it. But let's say, for instance, they said, well, you're guilty of an insurrection because you were at the Capitol on January 6th. And you might say, I just went to hear the president speak and was interested in seeing the building. And then when people crashed into it, I just got swept up. And they imagine them then having an expert saying, well, only people that are committed to the overthrow of the government went into the building without ever actually having to accuse you of it and present evidence that that was your purpose. But then you're going to be held, basically imputed guilt based upon this expert's testimony. So it's about whether or not this expert will be allowed to testify to sort of a general theme of somebody's behavior, even though they have no actual evidence about that person's behavior regarding those facts.
Yeah, it does seem a very slippery slope that you can say people who are like this tend to do this, because then we're essentially looking for convictions based on generalities, and that seems like
the drug war has done immeasurable damage to our liberties here in the United States, and this is another component of it.
Well, you can catch up with Scott's writings on each of the really fascinating Supreme Court cases on the pages of libertynation.com. Scott, thanks ever so much for joining us.
Thank you, Mark.
And that's about all we have time for on this week's edition of Liberty Nation Radio, heard coast to coast on the Radio American Network. I'm your host, Mark Angelides. My special thanks to Andrew Moran, Liberty Nation's Economics Affairs Editor, and to Scott Cosenza, Liberty Nation's Legal Eagle. And of course, my thanks to you, the listeners out there in Radioland, who take the time to tune in, week out. You are appreciated. Thanks very much for listening. We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
Don't get caught up in the media madness. Join our movement for free thinking and free speech at libertynation.com. Publishing news and analysis 24/7 with original articles by our team of authors who tell it like it is. Join us each week for online TV shows, The Uprising Podcast, and Liberty Nation Radio. We believe in free thinking and free speech. We are libertynation.com.